That's with a lot of people with the wealth and a lot of money, they usually purchase bonds because it's a safer investment than the stock market, because you don't know what the stock market can go up and the stock market can go down. So if you want a safer investment, bonds will be where you would want to go. Now keep in mind that bonds can be paid out quarterly, semi-annually, or annually, meaning they can be paid 4 times a year, twice a year, or once a year in one lump sum. So that payment, that 5%, can be spread out among 4 payments of like $12.50 or something like that, or it can be spread out among 2 payments of $25, or it can be one lump sum of $50 at the end of the year. So that's just something to keep in mind if you're thinking about bonds. Now, mind you, I said that with the safer investment comes lower profit. So why would you put your money in a bond if it's only going to pay you 5% when you can make more money in the stock market? Well, when you have wealth and a lot of money, you just want to protect against inflation. And inflation is something that can eat away your money if you don't know what it is. And what inflation actually is when the cost of goods rise, so the amount of money that you have cannot purchase the same amount of goods that it used to be able to purchase, which means your purchasing power is less every day that you let your money sit still, which is why it's very important to invest your money. If you're not trying to get rich, that's okay. If you want to keep your money, you still need to invest so you can keep what you have. See, everybody who is investing in the market isn't investing to get rich or to make a lot of money. Some people already have a lot of money. They're just investing so they can keep their money and don't let their money get eaten away by inflation. Let me show you an example of how that can happen. See, let's look at a bank account with $1,000 in it. It's sitting there and actually losing money at the end of the year because it wasn't growing. The little interest rate that they give you in the bank account isn't growing enough to really make you any money to compete with inflation.